Are you tired of hearing real estate agents and mortgage lenders say buy, buy, buy? Well, I am too. In this video, we're going to take a deep dive into the current state of the U.S. real estate market as of October 2023, with a particular emphasis on the greater Chattanooga, Tennessee area. Stay tuned to learn why now may or may not be a good time to buy a home. You know, during the past couple of years, the real estate market has been a whirlwind of activity. First, we had record low interest rates, then we had COVID and work-at-home situations. Add to that skyrocketing home prices. And now we have skyrocketing mortgage interest rates. That's why here in the fourth quarter of 2023, it's important that we take a discerning look at exactly what's going on. Over the next few minutes, we're going to talk about factors driving the market. We'll discuss rising mortgage interest rates, as well as the continuing challenge of low inventory. We'll also examine the U.S. Federal Reserve's role in shaping interest rates and what their future decisions might mean for you. And of course, we need to discuss how inflation continues to dig a hole into your wallet and purse, making any financial decision, especially buying a home, challenging. So if you're feeling a bit lost in the sea of advice, I'm here to help. Whether you're a first-time home buyer, a real estate investor, or simply curious about the market's current pulse, you're in the right place. Let's start with the elephant in the middle of the room, rising mortgage interest rates. As of October 2023, rates have skyrocketed to the highest they've been in over 20 years. And this is right after home prices increased more than 40%, 50% in some areas, over the past 2.5 years. That's right, the 30-year fixed-rate mortgage, according to Mortgage News Daily, was 2.76% in January 4 of 2021. And as of October 6, 2023, it stands at 7.81%. And many folks are predicting that it will go above 8%. Of course, the interest rate that you get on your mortgage loan is influenced by many factors, including your credit history, debt-to-income ratio, and so on, things that you control, but geez Louise. Of course, rising mortgage interest rates affect folks who are considering purchasing a home. Let's just say that a lot of prospective home buyers are feeling the pinch and deciding to hold off for a while. Take a look at this graph from Visual Capitalist. You can see that when interest rates were low, home sales went up. Conversely, when interest rates went up, home sales went down. You can also see this in the composite index of mortgage applications versus mortgage interest rates chart provided by Mortgage News Daily. Now, all this provides an explanation as to why you're now seeing and hearing a lot of folks in the real estate industry and in the mortgage lending industry emphasizing that it's a great time to buy. Say, if you're getting value out of this content, smash that like button and subscribe to the channel so that more folks can enjoy it. Thank you. Now, it may be a good time for you to buy, and if you've already made that decision, stay tuned, because in a few moments I'll share some tips for you to consider in this current market. But you shouldn't feel compelled, you should not feel pressured by cute, engaging, or even ominous posts on TikTok, Instagram, or Facebook saying buy, 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 or it's never been a better time to buy, or even worse, if you don't buy now, you're going to miss out on something important. No, 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 you don't need to feel pressure, you need good info, and you need support in making the best decision that you can make based on that info. So engage with reputable lenders, ask tons of questions, explore various financing options, and make the decision that is best for you and your family right now. Oh, and by the way, we have all had enough of the marry the house, date the rate. Barring an expansion of the conflict in the Middle East, I don't expect the 30-year rate to make any significant declines anytime soon. So don't listen to that nonsense. Be financially comfortable with the rate that you've been offered or that you have right now. Make sure that you can make your monthly payments on time at your current mortgage interest rate for at least for the next 12 months. Set aside some money if you can and be prudent. And if rates do go down by 1% or more, have a talk with your lender. A continuing big challenge for many buyers in the markets, including greater Chattanooga, Tennessee area, is low inventory. Buyers are facing fierce competition for the limited number of available homes. The scarcity continues to support higher prices in many areas of the country, including the greater Chattanooga, Tennessee area, which may not be great news for buyers. As an aside, although we see price reductions on individual homes, we are not seeing overall price declines. Chattanooga isn't Boise, Idaho, Austin, Texas, or much of California. Most likely, we'll finish the year in the greater Chattanooga, Tennessee area with only a 3 to 4% increase in median home prices year over year. Now back to inventory. Last fall as well as this fall, we are seeing a modest increase in inventory, but at this point it's difficult to tell whether this is seasonal or not. We do know that if mortgage interest rates continue to rise, we'll see a corresponding rise in inventory. Houses will sit on the market longer, multiple offers will diminish or disappear, and sellers will be more likely to consider price reductions. All of these things happen in a rising mortgage rate situation like we have now. Conversely, if mortgage rates begin to fall, look for less inventory, fewer homes on the market, and further increases in prices. In many places, it still is a seller's market. It certainly is here in the greater Chattanooga, Tennessee area. But even though it is a seller's market, you shouldn't be discouraged. With the right real estate agent, you can still find a good quality home in this competitive atmosphere. Take a look at off-market listings, consider fixer-uppers, and be prepared to act swiftly. Remember, patience and persistence can pay off in a market like this. Lately, I've been pointing my clients to new construction. There are many places here in the greater Chattanooga, Tennessee area that have new homes literally coming out of the ground, and we are truly blessed with many quality builders. And while we have luxury new construction with the latest designs and beautiful fixtures and finishes, we also have affordable new construction perfect for first-time homeowners or folks considering downsizing. And we have everything in between. Many of these new communities will have winding streets and underground utilities. Other amenities may also include a swimming pool, clubhouse, or a tennis court. But be sure to talk to your real estate agent before you begin looking for new construction properties. Folks share with me their frustrations of going on to Zillow or a builder's website sometimes and finding out that a brand new community has already sold out, or that the model home they want has already gone under contract. We local agents can talk to local builders to find out exactly what's going on. Now, there are multiple advantages of buying new construction in the current market, and I'll mention a few. First, depending on the builder, you may have the opportunity to make design selections: cabinetry, countertops, lighting fixtures, flooring tile, paint colors, and so on. That's not usually the case, however, on more affordable production homes. Second, in this market, many builders, not all but many, are offering buyers incentives, say like adding certain features for free or offering a builder's credit at closing. With rising mortgage interest rates, some builders are offering to buy down an interest rate. Some builders have partnerships with certain lenders that can offer sometimes very competitive rates. With rates going up so sharply, however, it remains to be seen how long builders will continue to offer this option. Those are some reasons why you may want to consider new construction right now. Now let's briefly talk about the U.S. Federal Reserve. The Fed has a pivotal role in shaping the U.S. economic environment. As of October 2023, the effective U.S. Fed funds rate, one of the many instruments that the Fed has to impact our economy, stands at 5.33%. Now, there's always a lot of talk about what the Fed is going to do or what it's not going to do. The Board of Governors, the folks that make the decisions for the Fed, have differing opinions on whether or not they're going to increase or decrease the Fed funds rate by the end of 2023. Currently, a majority of folks, lay people surveyed, are guessing that the Fed will keep rates where they are, at least for right now. Decisions made by the Fed hold considerable sway over the economic landscape and in turn impact real estate market. While there's no straight line from the Fed funds rate to mortgage interest rates, the Fed funds rate directly impacts interest rates on home equity lines of credit, credit cards, new car loans, and some new student loans. So if you have those types of credit accounts, make sure that you're watching the interest rate. Take some time to actually review your accounts, whether you receive statements in the mail or you view your balances online. The Fed itself expects the Fed funds rate to remain above 5% in 2024, so don't look for any immediate relief. And if you have high balances on any of the accounts just mentioned, pay down or pay off the highest interest rate balances first. Get rid of as much debt as possible and don't take on any new debt, at least not yet. On the other hand, if you are a saver, a high interest rate environment is perfect for you. I have a number of clients who are absolutely gleeful about higher interest rates. They've locked in some really juicy rates on CDs, certificates of deposit, and a few have even bought U.S. Treasuries. Yes, you can do that. Finally, inflation. It's been making headlines impacting the wallets and purses of Americans across the nation. From gas prices to groceries, we're all feeling it. This, coupled with rising home prices, is adding another layer of complexity to any financial decision-making process. In the current real estate market, it's imperative to factor in inflation. Think beyond the initial price tag of your home. What expenses will you have to incur? Repairs, HOA fees, and so on? Consider how your purchasing power may evolve over time. Consider how a change in income might affect your financial situation. What might seem as a comfortable home budget today could be stretched thin by rising cost of goods and services in the future. To navigate these waters consider exploring areas with more stable price growth. While certain areas may be highly popular or have experienced meteoric growth, others may offer a sense of slow but predictable growth. If you're in the market, contemplate the possibility of buying a slightly smaller home. There's nothing wrong with buying a home that fits comfortably within your budget. This could actually work in your favor should inflation persist in the short and medium term. And by the way, the house that you have now or the house that you buy next does not have to be the last house you own. Now, a silver lining during an inflationary period is real estate, which has always been considered a hedge against inflation. And so, as long as home prices continue to rise, that may be true. If you're paying with cash, have stable income or employment, or otherwise satisfy the needs of your lender, purchasing a home today may be right for you. You know, state income tax is burdensome. Glad we don't have it in Tennessee. Watch this video next.